Welcome back to MarketSnap, your daily market rundown. Today was a tale of two markets, with the Dow grinding higher while tech took a serious hit. The big story isn't just the Nasdaq slide, but the bond market's relentless pressure and a looming geopolitical showdown with Iran that has investors on edge. We're breaking down the winners, the losers, and the forces that could shape your portfolio for months. Let's get straight to the numbers. The Dow Jones Industrial Average managed a modest gain of 0.26%, closing near 53,400. But the real action was to the downside. The Nasdaq Composite dropped 0.76%, and the Russell 2000 fell by a similar margin. The S&P 500 slipped 0.28%, closing just above 7,650. The S&P's dip is notable because it snaps a recent winning streak and comes as the VIX, the market's fear gauge, jumped nearly 5% to 15.85. That's not panic, but it's a clear sign that investors are starting to pay for protection. The Nasdaq's underperformance is the headline. Tech is getting hammered, and a lot of that is tied to what's happening in the bond market. The pain is concentrated in the AI trade. Look at the weekly losers. CoreWeave is down over 17%. CrowdStrike has lost 15%, and Nebius Group is off 15% too. Even the big names aren't immune, with ARM Holdings down over 12% and Intel shedding nearly 14% on the week. Today's large-cap losers paint a similar picture. Alibaba got crushed, down 8.6% after announcing a massive $10.2 billion share sale to fund its AI ambitions. Marvell Technology dropped 5.6%, and Cerebras Systems fell 6.5%. But it wasn't all red. Robinhood was the star of the day, surging nearly 14%. Tesla also had a strong session, up over 5%, and Southern Copper gained a whopping 8.7%. Zooming out to the weekly winners, you see a clear rotation. BioNTech is up 27%, and the precious metals miners are on fire. Kinross Gold is up 20%, Gold Fields is up nearly 20%, and Wheaton Precious Metals has gained 18%. This is a classic risk-off rotation into safety. The most active stocks tell the story of the day. Nvidia, of course, was the most traded, but it was down about 1%. It's actually pacing for its seventh consecutive losing session, which is its longest streak since 2022. That's a big deal for a stock that's become a proxy for the entire AI trade. The big question on everyone's mind is Nvidia's earnings, which are coming up on Wednesday. There's a lot of debate about whether the stock is a buy or a sell right now. Some analysts are pointing to potential price increases for its AI systems due to soaring memory costs, while others are worried about the company's massive investments and financing arrangements in AI labs. The bond market is the other major force at play. Treasury yields are at their highest levels since 2007, and Treasury Secretary Scott Bessent has stepped in with an expanded bond buyback program to try and stabilize things. He's even talking about tapping the Treasury's general account, which has nearly $1 trillion in it, to fund these purchases. This is a massive intervention, and not everyone thinks it's a good idea. Some analysts are calling it a nightmare scenario because it could actually drive inflation expectations higher, which would force the Fed to hike rates again. Others, like Ed Yardani, are more sanguine, saying the 10-year yield is just back to normal. Adding to the uncertainty is the Fed's Jackson Hole Symposium this week. Fed Chair Kevin Warsh is giving a keynote speech, and investors are desperate for clues on the interest rate path. The market is also watching the escalating trade war with Canada, where the U.S. has imposed 50% tariffs on $20 billion worth of imports. And then there's Iran. The U.S. is preparing to unveil what it's calling an economic D-Day, the single greatest financial offensive ever imposed on the country. This is a major geopolitical event that could have significant implications for oil prices and global markets. With all this macro noise, it's easy to forget we're in the thick of earnings season. This week is a big one. Beyond Nvidia, we have major reports from companies like Intuit, SentinelOne, Okta, and Zoom. Dell is also reporting, and analysts think it could beat expectations after its stock has already surged 235% this year. You can find exclusive earnings transcript summaries on MarketSnap to help you cut through the noise and get to what matters. Let's look at the sector action. Basic materials was the clear winner, up over 2.5% on the week. Healthcare and energy also posted solid gains. This is a defensive tilt. On the flip side, technology was the worst performing sector, down nearly 4% on the week. Utilities also fell over 2.6%, and industrials lost 2.7%. This tells you that investors are rotating out of the high-flying growth names and into value and safety. The crypto market is a bright spot, with Bitcoin posting its biggest three-day rally since 2023. It's up nearly 25% on the week, trading around $78,700. Interestingly, Michael Saylor's strategy sold $2 billion in stock, but didn't buy any Bitcoin, choosing to build a cash reserve instead. So what's the takeaway for a long-term investor? The market is at a critical juncture. You have record-high stock valuations, surging bond yields, and a Fed that's stuck between fighting inflation and supporting growth. The AI trade, which has driven so much of the market's gains, is showing signs of strain. The smart play right now isn't to panic, but to be selective. Look for quality companies with strong balance sheets and pricing power. The rotation into materials, healthcare, and even some financials suggests the market is broadening out, which is actually a healthy sign. That's a wrap for today's stock market summary from MarketSnap. Thanks for tuning in. If you found this breakdown helpful, make sure to like and subscribe and check out our exclusive SWOT analyses on MarketSnap to get a deeper edge on your investments. We'll see you back here tomorrow.